Investor Intelligence provides general information only. You should consider seeking independent advice to see how this information relates to your unique circumstances. Please refer to the terms and conditions available at investorintelligence.com.au for more.
Hello and welcome to this week's episode of Investor Intelligence, brought to you by the team at the Property Mentors. It's your weekly podcast for all things investment and hosted by me, Phoebe Sikowski-Wallace. Now, here at the Property Mentors, we are across a lot of property news so that we're always staying up to date with everything that's going on and so that we can continue to help our members on their investing journeys to stay informed, to make sure that they're getting the right information amongst a lot of the noise out there and to help them navigate this ever-changing market. And at the end of April, Domain, which is of course one of Australia's biggest property websites, released its quarterly house price report, which is an analysis of house and unit prices across Australian capital cities, focusing on quarterly and yearly changes. Now, if you want a really clear look at where the property market is at the moment, I highly recommend reading it, which you can find a link to that in our show notes, and you can, of course, find it on the Domain website. But joining me today to discuss it further is none other than Dr Nicola Powell, Domain's Chief of Research and Economics. Dr Nicola Powell, welcome to Investor Intelligence.
Thanks so much for having me on. It's an absolute pleasure to be with you today.
It's a pleasure to have you. I'm particularly excited because you're really my go-to person on LinkedIn for all property updates. So it's an absolute honour to be able to talk to you and ask you some questions face-to-face, or screen-to-screen in this case.
I'm an absolute fan of LinkedIn. I love nothing more than sharing a quick old graphic and a bit of a commentary around that graphic, and also engaging with other like-minded individuals within this space who either want to, know more about property or are within the property analytics space, or they're a real estate agent. It's really great to have those different perspectives and that chat throughout that thread. That's what I love about LinkedIn and about that that it creates.
Yeah, it really is such a great platform to have those conversations and, as you said, to learn those new perspectives. Now, Chief of Research and Economics is quite the title. So before we delve into the questions I have for you about where you're sort of seeing the market right now, can you tell me a little bit about your career journey so far and how you got to where you are today?
Yeah, so I was one of these individuals that spent a lot of my lifetime at university. So, the degree, I did a master's and I did a PhD. So when you amalgamate that all up, that's quite a number of years. I think in total it's about 8 years. Yeah, a long time. What I've spent the last decade doing is really focusing in on the property market. And I am one of these people that are absolutely obsessed with the property market and market dynamics. I've been lucky enough to, I've been with Domain now for 7 years. And prior to that, I was with All Homes, which is the primary portal in the ACT. And I've really been able to focus in on the property market dynamics and kind of demographic shifts. And, we're so lucky at Domain that we have such a broad base of data, first-hand data of what consumers are looking for, where are they looking, where are they searching, where do they want, what do they want to buy. And then we also kind of our pulse on the housing market. So, I've really dedicated my career to date to property.
Yeah, amazing. And you've also been featured on, as a leading property expert on some of Australia's biggest podcasts, such as Hack on Triple J. You've been a regular guest on The Quickie from Mamma Mia and, of course, other well-loved property-related podcasts. So thank you so much for joining us on Investor Intelligence today, because we really appreciate that. But Nicola, as I mentioned before, you've recently released your house price report for March 2023, and we've all read it here in the TPM office, and it's just got some great insights. But can you give me a summary of the current property climate and what factors are driving it?
I think we've seen a real shift in the housing market over the first quarter of this year. What the latest report showed is that we are seeing some markets bottom out in terms of pricing, and they have started to increase over the first 3 months. It seems to be being led by Sydney. So we saw house and unit prices increase in Sydney over the first 3 months of the year. So, it's the first time that we've come out saying that Sydney property markets look to have bottomed out and are increasing. I think what I would say, though, is while we are seeing prices rise, it is at a much more moderate pace. And what we're expecting to unravel over the coming quarters is this kind of continued, maybe stable nature. I would say, what we've got now are much more balanced conditions. And it does depend upon which capital city market you are in. But I think the cities that saw the biggest change over the March quarter were Sydney, but also Brisbane. And largely what we're seeing is an increase in price or much more of a stabilisation. And I would say that the two cities that remain the weakest are Canberra and Hobart. We have got prices still falling in those markets. But Canberra and Hobart, I think what we're picking up now across the different capital cities is we have got this multi-speed market. That's what we were seeing prior to the pandemic upswing, and we've seen our capital cities revert back to that multi-speed market. Canberra and Hobart are a little bit later on in their property price cycle than some of the other capital cities. I think, we've got Sydney much further along, showing signs of improvement, and some of the premium areas within the Sydney market were even showing increases in price in the second half of 2022. And that's what we tend to see when a market moves into recovery. You see these premium areas starting to improve, and that is exactly what we're seeing now. But in Canberra and in Hobart, we have got prices still falling. They saw the greatest rate of price growth during the upswing. So there is this aspect that it does place them in a more vulnerable position for further price falls. And actually in Canberra, it is the city now that is currently furthest away from its respective price peak. So very different dynamics to what we were seeing in 2022, actually.
Yeah. And we really are currently in that sort of recovery stage following the pandemic, which to me kind of it feels so long ago now. It feels silly to sort of mention it. But are there any kind of lasting impacts that you still expect to see from that?
From the pandemic period of time, it's been fascinating to watch unravel as an analyst. I think, what COVID created is one of the greatest, not if the greatest, social and lifestyle changes that we've seen in Australia.
Yeah.
It was almost like decentralisation driven bottom up. We've tried to improve affordability by decentralising our capital cities. And we just haven't been able to successfully do that. And what COVID did is it came along and went, hey, we can all work adequately and efficiently from home. And that's exactly what we saw. We reimagined our homes. We reimagined that work-life balance. And that's here to stay. I think I am one of those people. I work in a hybrid environment. I'm part in the office. I'm part at home. So it's changed the way I've personally used my home. I am one of many that fall into that bucket. And I think it really has changed what we want from our home. I think what we're probably seeing at the moment is different dynamics coming out, but I don't think we're going to revert back to pre-pandemic times. I think this hybrid way of working is here. We saw the pandemic create this major demographic shift, because we've got to remember that the pandemic boom was Australian driven. We didn't have overseas migration placing demand on housing. We saw Australians moving. They were moving into state. Southeast Queensland was one of the benefactors to that. And at the moment, I think there's obviously seen a slowdown in that trend, but it's still there. Affordability in Southeast Queensland is still there relative to Sydney and relative to Melbourne. And that pull from Sydney into Southeast Queensland was already there even pre-pandemic, but it was accelerated by the pandemic. But then you've got this other dimension coming in as well in terms of overseas migration coming back to Australia. So, it's a timely reminder really that there are multiple factors that drive demand for housing and our house price cycles. But I think for me, the pandemic is certainly going to leave a legacy, and that is how we use our homes and opening up the locations in which we can reside. I think one of the interesting trends from the pandemic is I think we extended that commutable belt that we were willing to commute into a city, because if you're only doing it, maybe 2-3 days a week, you can compromise, and it kind of extends that commutable belt. I think that's here to stay. And I think particularly those regional areas that are close to our cities are going to continue to perform well. I think some of those more far-flung regional areas maybe not so, because we have to remember during the pandemic that upswing was broad-based. It was Australia-wide. It was price activation. And now what we're seeing are slightly different paces, different directions of growth. And actually, when you do that comparison of our regional markets to our capital cities, overall, that pullback in price in our regional markets has been far less than what we have seen in our major, more expensive cities.
Yeah, I don't think anyone could argue that the pandemic hasn't turned so many things on its head. So, Nicola, what trends are you seeing in terms of property supply and demand at the moment, both in terms of geography and types of properties?
Demand and supply has been a really interesting dynamic that has really shifted since spring. And we've seen a pullback in demand and supply. And I think that's the reaction of Australians as a result of interest rates moving higher, economic uncertainty, the rising cost of living, and the rising cost of holding a mortgage, holding debt. And I think what that does is it creates uncertainty. And there is this link between, consumer sentiment and housing market activity. If you feel unnerved about the future economy or your future budget, you are going to pull back on big ticket items such as buying and selling property. We've really seen that pullback, demand and supply. But I think what's interesting is the unseasonably weak flow of new listings that we've been seeing coming on across Australia, really. And this is a trend. I wouldn't pin it to one specific location. It really has been almost an Australia-wide trend. This weak flow of new listings has been occurring since September of last year, so since that spring period. When you look across our combined capitals, new listings are still about 6% below their 5-year average. But what we've got is also total supply. So that's the total availability of current stock on the market has also pulled back in certain areas. Total supply is lower over the past year in Sydney, Melbourne, Brisbane, Perth and Adelaide. That's 5 capital cities out of our 8 cities that have seen total supply lower year on year. What that says is we're seeing sellers pull back more deeply compared to demand in the market. And actually, this is one of the reasons that's really helped to support pricing and is why we are seeing in some of our markets prices actually rise, because I think buyers will, it may have felt a bit unusual for some buyers in the market late last year when we've got talk of a downturn, prices are pulling back. But if you're on the ground in a certain area as a buyer, you would have been feeling that the competition was rising. You're competing for a much smaller pool of stock, and particularly those homes, turnkey homes we call them, have been in high demand. People are a bit more wary about committing to a home that needs extensive renovation. I think those turnkey properties have been selling quickly. They have been in high demand. And I think buyers have been competing for those particular homes in the right locations.
Yeah, that was actually really one of the fascinating parts of the report for us. And so what impact do you think banking and government policies such as the recent serviceability changes, there was the Queensland tenancy law reforms, and then also the RBA review, what impact are they having on the property market?
Look, I think any kind of policy, or whether it's a review or a potential change, can have short, medium or long-term impacts depending upon whether it's something that's being spoken about or something that's been actioned. So it certainly can influence housing dynamics. And I think, when you talk about tenancy reforms in Queensland, there are other states and territories that are also going through reforms, such as the ACT is another one. We've got to think with changes like that, it can have an impact on the investor segment, which then has ongoing impacts on vacancy rates and rental supply and rental pricing. We've got to think that 1/3 of Australians are tenants. We're seeing people rent for longer. Some people are lifelong tenants. And I think overall, my view is that we do need a shake up of the rental sector, and we need to be offering things that are Current practice in Europe, as an example, things like longer term leases where a tenant can sign a lease for 3 to 5 years. In Australia, it's 12 months. 12 months is nothing. If somebody wants to make a dwelling their home, they are able to do that in Europe. They're able to sign these longer leases. I think with those tenancy reforms, though, it's a fine balance. And I think largely what we have seen is the change in tenancy reforms has really swung. It does swing in both ways, but largely the changes are swinging in favour of tenants. And this concerns, in my view, this is concerning when we've got a landlord's market across Australia and we have a rental crisis in many areas. It's not just one single area. It's a very competitive rental market. When you come in and you change rental reforms, it can be a deterrent. It can be a deterrent for potential investors coming in when they feel like they've got many hurdles to jump through. And it could deter them from investing and creating additional rental supply, which is grossly needed across Australia.
Oh, for sure. In that case, what innovations is Domain currently working on to help better understand the property market and helping people understand something like that and the sort of flow-on effects of that?
This is such a great question. And I think, when you're navigating property, whether you're an investor, whether you're a first home buyer, this is a big ticket item. And for most people, it is their biggest financial investment. So we want to make sure we're making the right decisions at the right time for us with the right information that is available to us at the time. What Domain is doing is we're continually innovating in this space to help everybody have a better understanding of the ever-changing property market. Because when you look back over the last few years, I think for many, when you step back, it feels a bit like a roller coaster. And this is generally what we see in our big cities is we do see big swings in property price. And it is natural for people to want to purchase at the bottom and then sell at the top. It's what we all want. I think that's the dream. But it's very hard to do. And so what we want to ensure is that people have the right tools to help them make better decisions. So we have tools like, where can I afford to buy? So what this allows you to do as a consumer is select your budget and pop in what your requirements or needs are from that particular property. And what the tool does is it helps you to find the suburbs based on the criteria that you've put into this tool. And it will help you find the suburbs that you can afford to purchase in. And that's great for an investor, great for a first home buyer, great for anyone really in the market. But I think what's good about this is it may bring up areas that you might not have considered that fall within your budget. So it could open up opportunities for buyers. One of the other tools that we have at Domain is called Domain for Owners, and I am a particular fan of this one. So it allows you to, you have your own profile, and it allows you to track your home. And what this does is it gives you an estimate of your current, the worth of your current dwelling. That's invaluable information when you're looking to perhaps buy an investment property. How much equity growth have you had in your current home? So it allows you to have that kind of broad understanding of your position before you go into making your move, whether it's buying an investment property or becoming a changeover buyer.
Yeah, amazing. And one of my next questions was actually going to be, are there any emerging technologies or innovations that you think will have the biggest impact on the property market in the coming years? But I mean, that sounds like that's going to help so many people, whether they're investing, whether they're looking for a PPR, whatever their situation is.
Look, it really is. And I think, you can track multiple properties as well in Domain for Owners. So if you have your owner occupied home and then you buy that investment property, you can track it. So it allows you to kind of keep track of your portfolio or the homes that you own and that estimated worth of those. But also, allow you to track things like the sales that have occurred in the area. Because I think anybody looking to buy or sell property, my advice is to do your research in terms of, I'm always, sticking that love heart on a property that I'm going to track. You see how much I'm not interested in buying it. Yeah. I'm interested in the outcome. How much are buyers willing to pay for that home? Did it actually sell? Did it sell at auction? Did it sell by private treaty? Because what that does is that educates me on the dynamics of that localized market. Because let's be honest, we all focus in on these specific areas in which we want to purchase, whether that's for our own property or whether it's from an investment perspective. So it allows you to kind of track those particular areas of interest, which I think is gold.
Yeah, like that's one of the things we're always saying as well, like do your research. And we do find a lot of people want to buy in certain areas because they've got an emotional attachment to it. But I feel like a tool like this would really bring it down to sort of numbers and facts and take the emotion out of it and allow people to, sort of track everything and have that kind of those hard facts in front of them so that they're not sort of winging it if they do go out into the property market.
Look, and the emotion in property is very high. And I think, we say the fear of missing out during an upswing and the fear of not getting out during a downturn. And it's really hard to take away that emotion. And I can totally understand that, particularly if it's your primary residence, it's where you're living. But I think if you can remove the emotional side from buying and selling property, it's certainly the best way to be, because I think it's very hard to do, but we have to view property as an asset, and you've got to treat it like an asset, particularly if you're wanting to build wealth and you're wanting to build family wealth. Maybe it's for the future planning to help your children get onto the property market. I think we all need to make strategic decisions that are right, and sometimes that's very hard to do when it's masked by emotion.
Yeah, no, I couldn't agree more.
Here at The Property Mentors, we have decades of experience investing in property. We know what to look for and what kind of impact it can have on your portfolio. We have access to brokers, accountants, and property managers to make sure your portfolio performs. Visit thepropertymentors.com.au to learn more.
So how do you see the property market evolving over the next few years? And are there any kind of standout opportunities and challenges that you foresee for investors specifically?
Look, I think opportunities exist this year, absolutely. I think what we've got are prices are still below their peak. Mm-hmm. In some areas, we have seen them increase or in some areas, they're further along the recovery than others, and that is being led by areas such as Mornington Peninsula in Greater Melbourne, eastern suburbs in Sydney. We are seeing prices rise there. They troughed sooner, they're rising quicker. What I would largely say is I think overall at a capital city level, we're going to see conditions much more balanced this year. And in my view, a balanced market is a much better market to be buying and selling in. I think, if you're a changeover buyer, you've got to think that you might be selling your home for slightly less than what you would have got at the price peak, but you're also buying into the same market. And I always say, if you're buying and selling in the same market, one should really counterbalance the other one. And I think, what this year, that more balanced conditions, and we might see a little bit we are predicting a bit of an increase in property prices over FY24, but I think that rate of growth is going to be much more subdued. So, I think that opportunity of purchasing when prices in many areas are still below their price peak, but we have to remember though, the diversity of conditions is certainly there in terms of the pricing. We've got Perth and Adelaide with house prices at a new record high. They're the only capital cities to be at a record high. So it's about seeking the opportunities in the market in which you want to purchase and really making sure you understand not only the dynamics that are happening at a city level, you have multiple property cycles going on within a city. So, knowledge is power, really, when you're looking to buy and sell.
And the house price report, and as you sort of just said before, that Sydney's sort of leading the way in terms of recovery. Melbourne's a little bit more stable and Brisbane's kind of not far behind. But how quickly are you sort of expecting to see that market recovery progress?
So what you tend to find in price cycles are downturns tend to be shorter and less severe than the upswings. And so far, I think, we're likely to still see that roll out across our cities. I think what we're likely to see is a slow, steady, I use the word steady, a steady recovery in price in Sydney. I suspect it's going to take more than 3 quarters of growth. You're probably maybe looking at 12, 15 months maybe for a market like Sydney to recover in price. But I think, it doesn't matter what market, whether it's up, down, or going sideways, there's always opportunity. And I think you've got to seek the right opportunity at the right time for your own personal financial circumstances as well. But as I said, you mentioned we've got diverse dynamics going on. Adelaide, Perth at record highs. We've now got Sydney starting to recover and recording a bit of growth. And we've got weaker conditions coming out of Canberra and Hobart. So this does showcase that you can't do this broad brush approach of all of the markets are reacting the same, because they're not. There are different dynamics. And I think particularly when you look at a market like Sydney is still an extremely expensive market to purchase in. And I think, we've got interest rates at an 11-year high, dent in borrowing capacity, higher costs of holding debt. And I think there will be an element of affordability that will constrain an upswing, or, and I'm not saying by any stretch of the imagination that we are going into an upswing in Sydney. We're in that recovery. I think really to spark another upswing in price, we would need to see a catalyst. And that catalyst can take the form of, like we were talking earlier, a favourable government policy that brings first home buyers to the market or investors. Or it can be something like cuts in the cash rate, which are expected to occur late this year, maybe early next year. That will be the catalyst that sparks a greater upswing. And I think harness the steady and stable conditions that we're likely to see this year.
Yeah, amazing. So obviously investor intelligence, we're very heavily focused on the investing side of property. But what data and metrics do Domain believe property investors should be focusing on in order to make the most informed decisions at the moment?
So, there's variety, I think, and it really does depend whether you're chasing cash flow or equity growth. You tend to find that equity growth, you see steeper upswings in our bigger capital cities, such as Sydney and Melbourne, but they're high-priced markets. So sometimes, more likely or not, investors are, negatively geared in those markets. So I do think it does depend on what your outcome is, what is your financial position. But I think it's also kind of understanding things like vacancy rates and areas that do have high levels of rental. What type of rental are you trying to create in terms of, is it a short-term lease? Is it a lifestyle? A longer-term lease, city-based, regional. And I think, I'd be looking at things like yield potential, vacancy rates, to have an understanding of supply and demand from the tenants and investor side in each of these different markets. But then I'd also be looking at areas that have provided steady capital growth on a property, particularly if you're looking at it as more of a longer-term hold. And I think, property should always be looked at as that longer term hold, so you can ride the waves of a property upswing and downturn.
No, thank you for that, because I know, obviously everyone's going to aim for different outcomes and they all have different goals. So, but you managed to sort of answer that question for everyone. So amazing. Thank you for that. But Nicola, to wrap up, this has been amazing. Thank you so much. But to wrap up, what advice would you give to someone looking to enter the property market in this current climate?
I think be very aware of your borrowing capacity and be very comfortable in taking on that debt. I think, we've got inflation is still very high. I think, it's about financial security and being able to actually service that debt. I'd also be making sure that I was purchasing within a sound market. In terms of, by sound market, I mean an area that has high levels of rental demand, or medium levels of rental demand. And you tend to find that higher levels of rental demand come from inner city areas. It's where we see the biggest amount of rental properties. So I would be making sure that you're purchasing the right rental property that meets your own goals. But I think for me, it really is about that overall kind of debt that you're willing to take on and that cash flow position. Equity growth as well, because obviously if you have that equity growth, it gives you that further leverage to then move on and buy maybe even a second one.
No, that's amazing. Thank you for that. And so thank you so much for your time today. And thank you for making data and property insights understandable and digestible. Again, like I started getting my news and updates from you, and I've followed you ever since. And it's because you make this information so easy to understand. And thank you for ensuring that everyone is able to, make informed decisions when it comes to property. Everyone listening should definitely follow Nicola on LinkedIn to keep up with all things property. But thank you so much for your time today. And I hope to have you on again to discuss future quarters.
It's an absolute pleasure, and I'd love to come back on again because I love nothing better than to talk about property. Thank you.
If you found this episode or any of our episodes helpful, please make sure to share and leave a rating to help us reach more people on their investing journeys. And of course, subscribe to be notified when new episodes drop. Make sure to follow the podcast on Instagram at Investor Intelligence Podcast. You can find links to our other socials in the show notes, including a link to the Property Mentors weekly blog. If you're ready to get your property portfolio in shape for financial freedom, check out Luke's latest book, Property Fit. You can get yourself a copy at www.propertyfitbook.com.au.